right. Hey, good morning, everybody. Lots of early birds here today. That's great. Welcome to the live stream, everybody. We'll say our good mornings as people roll in here. But to start off, people that are watching on the replay, we go live 8 a.m. to about 8:45 Pacific time, Monday to Friday. So it'd be great to have you join on a live stream if you're able to make it live. That'd be great. We've got a great group of people that show up. It's great. We have a good conversation about investing, TFSAs. We usually get sidetracked on something else, but that's okay too. And yeah, it's almost Christmas. It's Thursday, so today working day, tomorrow working day, and then we're off, which is nice. So I've got my coffee here. We'll see who's rolled in here. I know we had a few early birds in the chat. I saw it coming just as I was getting the stream started. So is everybody? Maybe some people are off for Christmas already. Maybe the case. So good morning, Candace is here. It's always good to have you, Candace. Welcome. And I see your other comment there, Candace. We'll get to it. We'll get the mornings out of the way. MC, good morning. Always good to have you here. Thank you. And Rod is here. Welcome, Rod. Yeah, cold. It's cold on the West Coast here too. Well, cold for us. Minus, I think it's about -6 or -7. It was cold yesterday, and snow. Not so much snow now. Kind of not as much, but I know from reading the news, I think we're expecting to get a bit more tonight, which is never great because on the West Coast, the roads are in the city as well. Thankfully not in the city. Roads are always terrible. Thankfully, though, I don't have to go anywhere. I've got my groceries. Did all my little errands. If I do have to go somewhere, I don't have to go far, which is good. And I have my winter tires, so not too worried about that. It's the people that don't have the winter tires that are always the problem, which seems to be more of the thing. I notice more in the mainland in Vancouver. People don't have proper driving tires, that's for sure. So if you're having to go out, drive safe, that's for sure. And it is -34. I remember those days in Calgary. I remember days walking around because I take a lot of pictures and heading out in the morning. And part of my route that I would go, Rod, was a sign that would show the time, and then it would also flash onto the temperature. And there was a few days like that too. That was cold. It was so much so I always tried to go and take pictures when I can, but it was so cold the camera wouldn't even work. So no pictures. It would just stop working. So that's how cold it is in Edmonton right now. And here it's really with snow, but it's really cold because it's really dry right now. It feels like my lips are all. I woke up this morning, my lips are all chapped. I have to find some chapstick with my coffee. So Candace, good point. This will bring this comment up because obviously we had a good day yesterday, right? Yes, Santa rally. But then we wake up today and we get what we have today. And that kind of bring us to a bit of the news and why and how this is happening. But so Brian that's asked to let us know the Santa Rally goes from December 23rd until January 4th. So we still have time, right? We can hold off and we don't have to worry about today. So maybe today's the buying day, and then tomorrow we start to rally. I don't know. It would be nice to end the year on a green note, but we'll see what happens. Obviously, in the long term, this will just be a blip, but hopefully. But we'll see what happens. Thanks. Make sure you say thanks to Brian. That's awesome. And Terrain is here. Good morning. Welcome. Good to have you here. Coming up to the holidays, is everybody? I guess I have a couple things. So is everybody ready? I guess the first question would be: is everybody ready for the holidays? I don't go crazy at all with Christmas stuff. I have one friend that we buy for a little silly thing every year, but that's it. And that's done long ago because I usually find something on Amazon. So that's already done. And that's the only one. And then in terms of family and stuff, just because of the holiday season and everything else and traveling, which just seems to be a good thing because right now, all of the, not that I'd be flying, but if you're taking a ferry or any kind of travel stuff is it's a gong show out here right now. I was reading the news that Vancouver Airport is canceling flights left, right, and center. There's flight delays and if more snow is coming. I think I think from what I read actually is WestJet, Air Canada and stuff. They're actually asking people to fall if they cancel they're recommending they cancel their plans for a refund before and replan it for after the holidays. So I'm not planning on going anywhere until the first week of the new year, which everything should be hopefully hopefully fine by now. Hopefully the snow will be gone, at least here, and then be able to go visit my parents for Christmas after New Year's. But that's kind of the decision we made, instead of trying to race around in the crazy time of year. And that brings us to our first first bit of news article that we can share, and it talks about Christmas and procrastination here. And let's pull this up. Found this one because this is the time. It's like the last few days. So holiday procrastinators are back in force, blame inflation. So this article is kind of interesting. It's obviously out of the States, but basically it's mentioning that people this year are spending a little bit less. We'll obviously know that when the numbers finally come in for Christmas. I don't know if anybody on the chat, let me know if anybody is spending this less money this year on Christmas stuff, more money, same. Always good to hear what others are doing. But a lot of people last year were basically buying more because they weren't necessarily as confident that they were going to get it right with all the supply chain issues. But that seems to kind of have worked itself out a little bit. And last minute shoppers are back, and the kind of prediction is going to be whether people are spending less money but still busier in the shopping the last times of the year, partly because Christmas falls on a Sunday this year. So normally the shopping days like during the week would be very busy, but this time now there's a Saturday before Christmas that people are going to be, hitting the mall. So I feel bad for anybody that has to go out shopping for anything in the next like 3 days. It's going to be, I think no matter what, it's going to be a gong show. So hopefully you've got that out of the way. But this I did find interesting. Basically, partly not shopping until last minute because the people are waiting for obviously like a Friday paycheck to come in and making sure they have enough funds to be able to buy what they want to buy instead of just buying it and worrying about it later. So kind of interesting on that note on that. And people seem to be cutting back because of inflation, because of costs, even though they've kind of got raises, everything more expensive, rent is more expensive, mortgages more expensive. So just seems to be spending a lot less. We'll have to see obviously in the New Year's when the reports come out to see what happens with Christmas spending, because obviously this is like a huge time for retail for spending. And because last month retail sales from October to November were down in the States after a rise the previous month. So it's really kind of see what happens. It will be very, very telling to see once the numbers come in what people are actually doing for their spending, which is interesting. I'm not buying anything else for Christmas, which is good. And more on the weather. Snowshoers dream about a sofa by poodle producing raining cats and dogs, amount of rain, and then extra heap of more snow. Oh, okay, there you go. Yeah, snowshoeing is good. I do have snowshoes, and I could probably actually use them actually here. There's actually that much we have here right now too. Go to a park with a field or something like that, and it would work with snowshoes. You'd have to find somewhere that's not been tramped down, because it's not that deep, but I don't have to go to the mountains to snowshoe. If we get a lot more, I think we're supposed to get maybe about 10 more centimeters here. So if we get a bit more, I could actually snowshoe down the street. And morning, Brian. We were just talking, I think pretty sure it's the same Brian, but Candace was mentioning about had me mention about the Santa rally for you. So we got you covered. Thanks for joining. Grab your coffee, join in. We're talking about the lousy weather or good weather, depending how it's nice if you don't have to go anywhere. That's the thing. If you have to commute or something like that, it's kind of ugly. That's for sure. I think a lot of people are staying home if they can avoid it. I think we always talk about the bad, terrible weather more on the West Coast because it impacts us more. We don't necessarily usually always get a ton of snow. So when we get it, it's a big dump, and then it's a mess, before it melts. And as it's melting, it's a mess. So we're not used to it. It's not like we have snow on the ground all year, or not all year, but all winter. So on the note of shopping and everything else, obviously we see today, we're talking about the hopefully Santa rally, as Brian was reminding us, starting hopefully tomorrow. As you see, if you're looking at things today, we'll pull this up. Everything's down today. We had a good day yesterday, decent day the day before, but now back down. And it's interesting because it's the reasons are always weird. The market, I don't know. It's always kind of weird in the market because usually good news is good, right? But as now basically is good news is bad. So basically what happened is employer coming out of the States again, employers laid off fewer workers than expected last week. So when the numbers came out for employment and the economy grew more during the third quarter than expected, what that means is higher rates come in the new year. So good news because less people are being laid off. Economy's growing. That you would think that's great. Normally it would be, but now it's basically with the way we are with interest rates, it's just going to be coming up again. So I guess the market is kind of reacting to that, and I think we talked about it a few on a couple of streams. Expecting rates to continue to rise into January. Probably a slowdown. I'm kind of betting on. I think a lot of people kind of have the same opinion, but nonetheless, come January, we can probably expect interest rates increasing, which isn't a good thing. So good news is bad news. Now, one last article, and of course, obviously, if anybody has any questions, comments, fire them up there. The stream is all about you all as well. So if you have any comments or questions, let me know. It's always great to hear. It could be even not even related to investing. That's okay. That's okay. But I do have one last article to share, and I brought this up probably last month as well. But it seems to be a trend that's continued, which is interesting. This is Canadian news. We did find something Canadian, and we'll pull this up. This may not be any surprise to people that are watching this channel and everything else, because a lot of us are using our own self-directed TFSAs. Either it's a Wealthsimple or one of the other banks or something like one of the trading platforms. Billions of dollars keep fleeing. I love these headlines. Keep fleeing from Canadian mutual funds. So the 8th month in a row that Canadian mutual funds have seen net redemptions, and it's not just people selling out. 8.7 billion was pulled overall from Canadian mutual funds. So eighth month in a row of net redemptions, and people are pulling money out of balanced equity, bond, specialty funds. So kind of pretty much like everything. But then if you get down to the end here, which I found interesting, is the amount of money that goes into ETFs in November. So is $4.2 billion was put into ETFs. So they're seeing higher net inflows every month this year, except for in the summer in June. And I guess June was kind of that. That's when we had a drop as well in the market. So it's interesting how people seems to be getting out of mutual funds, probably partly for the cost and everything else, where ETFs are more cost effective generally. I find that was partly why it's interesting, because when I transferred some of my investments over to Wealthsimple that I had them in, they were in a type of mutual fund as well, just because that's what you did back then, right? When I had it, I have like an old company pension from a company I worked for years ago that I can't touch. It's in a lira, and I just noticed the fees, right? So now it's over into Wealthsimple on the invest side. So it's obviously the robo advisor, but it's all in ETFs. So definitely less of a cost. So seems to be people are looking at things. I think especially because I think it's probably looking this way as well. Especially when the market, we're in like a bear market, right? We're not making a ton of money, and you see those fees get eaten up, if mutual funds or any type of investment with a lot of fees, and you're not making any, everything's down. You might look at that more, and I think maybe that's what people are starting to do. I think people are maybe starting to look a bit more and doing their own investments as well. That's probably part of it. Seems interesting. It doesn't break down this article really what people are necessarily are doing, where if they're going like on their own or how they're changing it up. But yeah, I just found that interesting that that's carrying on. It basically comes down to lower fees that people are looking to obtain, which is great. That's a good thing to definitely look at. What you're paying for things is a good thing to check out. And train, if you have to travel, suggest you travel. Yeah, you want to probably get it over with. I think a lot of places, uh, I think a lot of people I think a lot of offices and stuff probably take the Friday. I know I've had some emails and stuff from places that they say the office is closing tomorrow at noon. So I think today's the day that people want to get away and start the extra long weekend. Obviously Sunday's Christmas, so Monday's a holiday, Tuesday Boxing Day, so it's kind of a write off. So um, it's a good way to maybe travel and then give yourself some extra time, I guess, train to get where you need to go and not be rushed at the last minute like everybody else. So good suggestion if you want to go. MC, I always like your comments. It's great. There's still tons of people who have mutual funds paying high fees. Yes. Uh, Knowingly, but probably none are not. That's the thing. You look at it, right? I suspect there will be a general shift to ETFs, but mutual funds will probably try and hang on to market share. Yes, that's the kind of thing. It's it's very different. Like I find you're the interesting part about like for mutual funds and in investments when you typically get if you have it, let's say it's through your bank. Let's generally where people would have it would be through your regular bank. Um, it would show up if you log in online. It shows up online. You see your balance. It's very hard to dig into the nitty gritty sometimes. I find with the online stuff, if you have investments there, it just kind of gives you a snapshot. Like this is your investment, and then they'll mail you you would always get your quarterly statements, right? And they're only every quarter, so they're few and far between. You're not necessarily on top of you're not on top of them as much because you'll get your quarterly statement. It's 4 or 5 pages. You're looking at it, and you're looking. All you're really kind of looking at is a lot of people are looking at the number and say, is it up? Is it down? That's what that's the first thing people will definitely look at, and don't necessarily pay as much attention to the back of the pages or the page that shows how much you actually paid. And because it gets hidden in there. It gets hidden in there in terms of what the cost actually was for things. You see your deposits, you see everything else, and then the big the number on the top, your investments made this much over X amount of time. And then if you actually go down and drill down and look at how much fees you pay, and if it's quarterly, what you're paying, or you're probably paying monthly. But it's if you look at and add it up, if you actually add that up, it can be quite substantial. I was, and it's the kind of thing where you get that quarterly statement, you look at it, you put it aside, and you go, I'll take a look at this later. This is my to-do kind of thing. I'll just let it sit, and I'll get around to it. And I think that's what happens. People, it's especially if it's coming to, maybe more people are doing it now because the market is down, right? So that they're being more cognizant of it, whereas the market is going up. If the portfolio value is going up, you're like, oh, this is great, nothing, I don't have to change a thing, right? So it's just the way it is. But then as soon as you start to we're coming down into a more of a down market, and you're seeing your investment value down, you'll look at ways to hopefully save some money somehow. So and exactly you have to kind of look at it. Fees, it's not all bad. I mean, you have to just look at it, what's going on what your whole portfolio is doing. But a lot of times, like for me, I can only kind of speak for myself and what I did. I mean, I'm kind of a prime example of this. Is my portfolio was doing good, sure, but when you break it down and actually look at um, what and this was also a bit different from because my my investment that I moved, that kind of got me into Wealthsimple, that I moved over, that it was a lira, and I can't put any I can't put any more money into it. So it's locked in, it's locked off. So I can't take advantage of any kind of, dollar continuing to deposit into it in dollar cost average or build it that way. It's in there. So the only gains it's making are gains that I'm making in the market. And if there's dividends, it was in a mixed fund, right? And so there's bonds and whatever else was in there. It's been a few years now, so I can't totally remember what it was invested in. But my fees were over triple what I'm paying a month in Wealthsimple. So it made sense. It made sense because I could get a very similar, investment mix of things. So it was kind of it made sense. It made sense for me to do that. But again, everybody's different, right? If it's working, it works. But I think there's ways to and there's even, some people obviously even with Wealthsimple on the robo advisor side, you're paying the management fee to them, and also the ETF fee is always worked. It's worked into like the price, but you could do that. You could go alone and do your own investing on that if you wanted to save that robo advisor fee as well. But I find it's not very high. And definitely cheaper than, getting a mutual fund portfolio set up. But just interesting. I guess it just kind of goes to say, like, I'm seeing everybody watching this is just check for those things, right? And just see if there's ways that you can save some money somewhere, because you might as well. Like I kind of broke it down, and if I'm saving, $40-$50 a month on fees, that money goes back into my investment. So that's kind of how, if you look at it that way. So you just have to be careful with fees because they add up. We talked about before, same with banking fees, right? I had the same thing, and you pay attention, but you don't pay attention. It's one of those things where I'll do that. I'll do that next month, and you just get busy and you forget about it. But once you do it, you actually save. You can save substantial little bit of money, and all those, even if it's only a little bit. Those little bits add up. If it's, if you're saving $20 here, $20 there, I just kind of think I can put that extra into my TFSA or keep it in my investment somehow. Better that way. But yeah, so I found that interesting. So let's continue 8 months of mutual fund, people coming down. I do find it interesting. It does kind of correlate though with. It seems a little bit to correlate. If I can pull up that article again, you can actually see the graph. It kind of correlates, like the withdrawals do correlate with the market coming down. So that's probably part of it as well. It's because people looking at it as you go. MC, yeah, even at 2%, it's substantial. Because you still pay whether you're up or down. You still pay. Yeah, for things. So just watch your fees. That's the idea. The one thing the one good thing I do like about for better or worse, I guess, because like we said, like a lot of mutual funds, you just get the quarterly statement. Depending where you have it, you might not even have online access to wherever, like a lot of places. I think most places have online access now, but again, if it's at your bank, you might have, it's limited maybe with what you can actually view. But that's what I find about Wealthsimple is I think you're more on top, like for better or worse, you're kind of, because it's on your phone, you can probably look too much, sometimes there's that as well, but at least you kind of know what's happening with your portfolio. So and I think you can make quicker kind of a look at things quicker, because you see stuff, what happens basically monthly. If you were to check in on your investments once a month or whatever you kind of do, you can see it a bit more openly, and it's all kind of laid out and with your statements. The one thing about getting Wealthsimple statements is kind of a pain in the butt. You have to kind of, it would be nice if they just, they do email you, but it would be nice if there's a bit easier way. If the app is kind of a pain, but you can get them. you can find them out, and you can also get them on the website, which is fine. But the app is kind of a pain to kind of get all your statements to download on your phone, and you got to send it to your, depending how you look at PDFs and stuff, you got to send it to, email it to yourself through your phone and everything else. So it can be kind of a bit of a pain that way. But the app, other than that, the app works. The app kind of works. I'll leave this up on the chat for people to see. I have no idea. I haven't even looked at that. So what does everybody think of the Canada Life split ticker, LFE? I'm going to pull that up, Terrain, for you. But if Canada Life Company split core, I have no idea, but maybe someone in the chat does can chime in. This would be probably a good one. I wonder if Candace, I think Candace did a video on split cores, but it could be completely wrong, or maybe it's in the works. But I'll leave that up if anybody has any. Maybe MC does, but I have nothing. I haven't even looked into that one. But maybe someone in the chat, does, that can maybe help you out or steer you in the right direction. And I'll leave that there for a little bit. So if someone jumps in and they have any ideas, definitely push it up. The one that's been popular now, and I've seen a couple people on the comments of the channel that people are looking at, are those new purpose yield funds. Vic, I don't think he's watching, but he left a comment yesterday that he bought some of the Tesla yield ETFs. So those will be interesting to kind of see about in the future. Tesla not doing that great lately. They're kind of all over. They're always in Elon and Tesla is always in the news for better or worse, but they can't seem to catch a break. But we'll see what happens with that yield ETF. Definitely looks interesting, for sure. So. There we go. And in terms of mine, I still have. It's like I'm slacking this time of year. I've been doing these live streams every day, and been busy with the end of year stuff with work, and haven't had a chance to keep getting the portfolio updates out. But that's okay. We'll get those. I do get one. I was looking at the channel, and there's actually, it's been like almost a couple weeks, but I haven't purchased anything really. So it hasn't really. It's only been going down, but other than that, here we go. So Canadian Life split core closed-end investment trust, which invests primarily in a portfolio of common shares of 4 Canadian life insurance companies. So it must be like Manulife. And, I'm not sure. Train. I wonder if let me just quickly. I think Candace did a video on split cores. I don't think if she's watching, she would be piping in to say, but she did one on. I'm just looking at her channel here. Maybe she didn't. Split corp share. She did one on. She did. Oh, you know what? She did one, Train. If you go check out her channel, let me see if I can. No, I can't really link it. If you go to Candace's channel, Mountain Finance, she did one 10 months ago, and it's in there. Obviously, things would change probably from 10 months ago, but maybe a good starting point. So check out Candace's channel, Mountain Finance. She's got one in there. Do a search. If you do a search on her channel, just search for split, and it'll show up. And so MC, rather pick and choose which insurance company to invest in rather than a basket. That's just my opinion. Yeah. Sometimes, yeah, you just have to keep on top of what you're sometimes I guess, obviously ETFs or split core or whatever is easy. Sometimes easier path of least resistance. Yeah, so rather go with one or two leaders in the space rather than get everything all bundled together. Yeah, that's the one thing I guess about ETFs too. Sometimes if you look at the weightings of stuff, it's like sometimes you're just almost better off just buying one or two of the leaders that are in it, because that's mostly what the exposure is, and you're not again, back to fees. You're not having fees or anything like that involved if you're holding just the share. But then just a bit more management on the. That's what I find. It's hard to kind of sometimes keep an eye on everything, But I guess if you're doing it long term, for long keep your what the amounts are you want, like percentage wise, if you want to keep it, or just that kind of thing. Maybe not as difficult, but it's just a bit more management. And sometimes ETFs, like I got my two main ETFs are the Vanguard ones. It makes things easy, right? Because you just like put it in, set it, forget it, and you don't have to pay as much attention, but for better or worse, right? And there you go. So thanks. Yeah, no, MC is awesome. They can usually figure if anybody's going to know, it would be MC. And that's true. Because some of the ETFs are only like 4 or 5, maybe 10 shares, depending what they are. Very concentrated. Yeah, it's true. There's some of the ones from what's the one that has a few that are very concentrated. Sorry, it's top of my head. They do. Let me see here. One sec. It's there's the Evolve ETFs that are kind of like that. MC. They have some kind of ones that are very concentrated. Like a lot of the tech ends. Like they have a tech one with like, Facebook, Google, Meta, like the top ones. They also have like a gaming one, and they do have a metaverse. They do have like a metaverse ETF, which is, I think it's only like 10. No, sorry. I'm just looking on their website now. It's 30 holdings now, but very. So it used to, I think, actually be less, but that's the same kind of thing. Not a lot of not necessarily a lot of diversification on certain stuff. So yeah, if you're not paying the management, you're not getting much diversification. So go direct to the stock itself, since the benefits are not very beneficial. There you go. Yeah, it's just a matter of figuring out the weighting that you want to do of each one and do it yourself. Because there might be one or two in there you just don't necessarily want, right? So just do your own thing. Yeah. Everybody's different in terms of, and also comes down to probably the amount of time that you're able to put into researching stuff and making sure you're buying the right ones. That's why ETFs are a lot of people buy ETFs. I mean, that's kind of why I do. It saves me time, having to research time to buy these individual shares and companies. But then also too, like look at, for example, the new one, the ones that came out we talked about yesterday, the yield ETFs. I mean, those are using call options and leverage. I mean, obviously riskier, more volatile ETF, but those are things that most people won't do themselves in terms of actively managing and that kind of stuff with their portfolio. So the ETFs give you that. You pay for it, obviously, but it gives you those features and that you couldn't do on your own. But so there is ETFs, like with other things that you can take advantage of if you're willing to pay. I didn't look at what the fees are on the purpose one, but I'm going to assume they're higher, obviously, than just a regular ETF that's not doing any kind of more active management. Because I'm just going back, I was on that purpose page, because because they have a few that are basically, they have a few that are very concentrated. Like they do have a car one for it's an automotive innovation ETF. There's 50 holdings, but like probably a lot of them are, depending on what you buy, they actually seem to be pretty evenly weighted. So that's actually not too bad, I guess. But they have some interesting ETFs as well, because they also do. They have the one that I have. The crypto ETF that I haven't bought anymore for a while. They do have that one. They do hold that, and they're basically like they hold just like Bitcoin and Ethereum or both. Doesn't pay yield though, whereas the ones that are coming out from Purpose pay a yield on certain things, which are interesting. I find I still want to buy. I'll still be keeping to buy more Bitcoin. The conversation always goes to Bitcoin, but we're not a crypto. It's not a crypto channel, but do my Shakepay. Still do my Shakepay every day, and buy a tiny little bit of Bitcoin. So we'll see what happens with that in the future. Good question. If you're adding 65, so yeah, obviously January 1st we get our. I mean, it doesn't necessarily impact me, but I know some people are at their limit or close to it. So this helps everybody. So you get extra bump next January 1st coming up to be able to put more. So if people are adding new money to their TFSAs in 2023, what will you be investing in? And right at the beginning of January, or waiting a bit, or dollar cost averaging? Great question. So I'll leave this up and let people answer that. We'll pull up their answers, because that's always interesting to hear what they're doing. So, but MC, I don't know if you were necessarily on my stream or caught the video on my channel, but I'll share again for people that are watching that maybe haven't tuned in and heard this yet. So this is what I'm doing to start off the year. I'm going to be putting $100 into my TFSA every week. This is to start off, so I should be able to carry on with that pretty consistently. Big thing is because I don't have a car payment coming up in February anymore, so I'm going to try and do minimum $100. And with that, I'm going to split it in half. I'm going to be putting $50 of that into the Purpose basically cash ETF, which is paying a decent dividend right now. It's about 4.59%. So the Purpose PSA, I believe is what it's called. And it's just held cash in Canadian institutions. You make higher interest, and so it pays currently 4.59%. $50 in that every week, and then with the remaining $50, I'm going to be buying one share of BTC.Y, so the Canadian High Dividend Yield ETF. So one share of that, and that's kind of trading around $41, $43, like it's in that range. So I'm not really going to be so I'm going to be dollar cost averaging into that one every week. So I'll buy one with the amount that's left from that $50 from the BTC.Y. I'm going to be buying a fractional share of VFE for the S&P. So that's kind of what I'm going to be continuing on to do. As I get some extra funds and stuff, I'll look at obviously if the dividends are coming in from the other investments, I'll keep rolling those back in. And as I get if I have some extra funds that come through that I'm able to put into the TFSA, I'll be checking what the percentages are kind of at for a lot of things, because I still want to keep investing in the different stocks that are in my portfolio. But the focus is going to be those two for the year, at least the cash one as well for a year, because I kind of want to build up a bit of a savings kind of emergency fund just in case, because I had some expenses with my card this year that I wasn't expecting on. So that's why I want to kind of build that up again. So that's what I'm kind of planning. And more, yeah, snow everywhere. I haven't looked yet. Maybe it's snowing again out here. I have to see. But good morning. Welcome, Alan. Good to have you. But lots of snow on the ground. So terrain there, good. He's focusing VFE, BTC.Y, and individual bank stocks. Yeah, there you go. So kind of very similar to what I'm doing. I don't have individual bank stocks in my portfolio. I find it's covered pretty heavily with that on BTC.Y already. So that's kind of why I haven't. BTC.Y is really heavy on the financials and energy Canadian, sectors. So I haven't bought any individual bank shares. That's the only reason. I just kind of find it easier I'll put it into BTC.Y. But good call. That's awesome. And so, Terrain, are you doing? How do you do it? Like, do you have a certain amount you buy every week, every month, or what's the? I mean, you don't have to say the amount, or just do you have a certain budget that you just dollar cost average, or are you doing it all at once? I guess what MC said. Oh, there we go. This morning I received. I can no longer say I'm working. There you go. Awesome. That's great. First, congratulations. I remember that from my other channel the first time. It's great. It's awesome. It's nice to get a deposit in the bank account. You get that email. You get that email from Google and says we've got money on your way. Good for you. Congratulations. That's really awesome. So hopefully next month that will continue and build, Candace. So no longer working for free. You can use it to invest. Put it into something. That's so awesome. And yeah, that's the thing, MC. I mean, I'm in the same boat. I think it's hard not to be. It's down, right? It's just I think we're going to be in for. I don't know. It's really hard to know. I think if you're able to obviously get through this bear, international will probably. Yeah, it's really hard to know. It's really hard to know. Most of my internationals, obviously, I have other investments that I use on Wealthsimple Invest MC that has obviously international coverage. So it'll be interesting to see what happens with that. It's hard to know. I think we're just going to be in for it seems like it seems like the bear market's been going for a year, which it kind of almost has. It seems like, and we just have to kind of get through it, and we'll see what happens but we'll see what. It's hard to know. I guess this is where diversification comes in, right? Because it's hard to really pick the right winner. Really is. And Terrain puts 10% of your paychecks into my wallet each week. Oh, 10%. So you put 10% and deposit 10% into your cash account, and then the dollar cost average. So that's awesome. That's really good. Good for you. I wish I was doing that when I was younger too. That's why I always think back and look at, because I mean I've just really started investing more focused the last couple of years, and you look at what you're starting to gain, even though, I mean, obviously portfolio's down, whatever, but your dividends coming in and building. You always think, oh shoot, I wish I would have put, like you say, 10% of your paycheck. I mean, even if I had put in $50 a paycheck when I was 20, I would have been a lot better too. But live and learn. It's yeah. So dollar cost average. I think that's going to be, especially with the market right now, with everybody, MC and Terrain and everybody watching. It's just kind of ugly, So I think dollar cost averaging is your friend, and just carry on with your plan for the longer term, and not try and. It's hard, like you say, with MC picking at S&P versus anything international. It's hard to know, really hard to know. So it's almost like kind of diversify and just keep putting in what you can afford and what your plan is, and then come out at the other end. Hopefully, if you diversified, it pays off, but really hard to choose one or the other. All right. Well, there we go, everybody. It's coming up 8:45. This stream always goes so fast. It's always awesome. And as I say, I always know that it's almost time to end when my coffee needs a refill. So on that note, if there's any last little comments, questions, fire them up. I'll give a little update on the channel going forward, though. And I'll post this one for other people to see. HCAL is a very interesting bank ETF. Not sure if anyone has looked into. I have not looked into HCAL. I can pull it up quickly and to see what it actually stands for. HCAL, Hamilton Enhanced Canadian Bank ETF. So there's one for people to maybe look at. HCal. Candace, if you're watching, there might be one for. I don't know if you do tons of ETFs videos, but there's one maybe that you could jump onto for MC. Maybe check out some bank ETFs. And so it holds. Sorry, one sec. Holds active weightings of Canadian banks, and it uses a little bit of leverage, which will cut it down. Okay, interesting. Yeah, one day maybe I will go to 905. My days. I can always judge it, Candace, because I have a tab. I have a tab open for my emails, but it's so I can always see when emails start to come in from work. They always seem to kind of start about this time because everybody seems to be getting in the office for 9 o'clock, and then I can look over and glance over and I see the little numbers, and that's my signal to go to. But it's quieter this time of year because it's coming into Christmas, like you're saying. But so there we go. ETF video for Candace. So MC, keep an eye on Candace's channel. Get out HCal in there. Sounds interesting. Something a little bit different. There's literally. I'm always like, it blows my mind on how many ETFs there are all the time. So yeah. And what do I do for work? So I am in finance, but more in financing. So I work for a it's a mortgage company, but it's not like a bank mortgage company. It's a private mortgage company. So I look at we deal with like I'm an underwriter for a private mortgage company. Yeah. So like with individual, more individual, like non-bank lenders. So I'm in finance. Yeah. But not typically not very much on the. I've been an underwriter for years now. So more of a administration role. So it means like lots of paperwork. I basically push paper. MC is in Go Easy. Oh, okay, interesting. Yeah, Go Easy. Yeah, they do kind of I'm the stuff for Justin for what I do is it's like non-institutional, so it's like private individuals that typically I'm not involved with the investor side of it. I'm more involved with the underwriting side of it and the administration, that kind of stuff. But interesting. It's good. Keeps me busy. Lets me work from home, which is nice. But Go Easy does the unsecured. Well, I think Go Easy does like the unsecured loans, and kind of like a MIC. So for those that are watching, a MIC is like a mortgage investment company corporation, where investors pool their money, right? But it's not a MIC because it'll be individual. Like it's individual investors that invest in mortgages essentially. Yeah. And then we also do like administration sometimes for it's a like for when you buy we also do like yeah, exactly. It's direct lending. So we also do some mortgage administration as well. So like if someone is an individual investor but just wants to invest their money, but not because if you're it gets all technical here, but if you're an individual investor, obviously the mortgage is in your name, whatever else, but some people don't. It's obviously they want it administrated for them. So we have like administration that we do as well for private individuals where people would invest their money, but it would go through the company, and then we take care of all the pay, like receiving the payments and getting the payments out to all the investors, that kind of stuff. So a lot of administration stuff, more on the end of that. Yeah, but it's all individual, basically individual investors. So not a MIC. So if an investor comes in, well, we have a pool of investors that we work with, but we place their mortgages when we're able to. What LTVs? Yeah. So for those who are watching loan to values, I love how this gets into work talk. Candace might get her 905 cut off. Anyways, no, I can talk about this all day, but for people that are interested, so loan to values, yeah, it really depends. MC, it really depends on location. We're based out of British Columbia, so we don't do really any mortgages in other provinces. But it really is location dependent. It's definitely file by file dependent. And it really depends on because there's different reasons people get private financing for certain things. But I would say in general, I can speak in general terms. Loan to values are down. Yeah. We don't have because it's individual. We don't like a MIC would have obviously guidelines that they have to follow. And it's really location dependent, but it's also very literally property. Every file is looked at differently because there's different reasons why you would go to possibly a higher loan to value on things. In general, lately, no higher than it really depends. It's hard to kind of say. There's no firm kind of cutoff, but ideally, probably. It really depends on location, but ideally no higher than 70 to 75%. But it really depends on this. It's really underwritten. The thing with private mortgages that we look at, it's really underwritten on a file by file basis, because sometimes a higher loan to value will make sense because of the situation. So that's just why we might go to a higher loan to value, but in general, trending lower just because of prices, for sure. Yeah. But it's fun. I enjoy it. But it's mostly a lot of administration stuff. So I'm not the one that's deciding the loan to values for a lot of depending on a lot of stuff. That also comes to the investors that are involved, because obviously risk versus reward, right? So some are more willing, MC. Some people are more willing to go. It's much like investing in the market. Some people are more willing to go into riskier investments for a higher return. The same thing could be said for real estate, right? And for lending on mortgages. Yeah, I don't deal with a lot of I don't deal with a ton of like investment people in terms of rental stuff. So it's beyond, I shouldn't say it's beyond mine, but I don't really deal with a lot. That's not really that's not been my focus. It's kind of there's a whole different, like so many different areas that people will focus on, that kind of stuff, what we see every day. But yeah, sometimes the returns can be better as a lender on a mortgage, or syndicating a mortgage with a couple other parties if you're wanting to do that. We don't do a lot of syndication. A little bit sometimes, but not very often. It's mostly individuals. Yeah. Zach, good to have you. Yeah, you are late. I think we're going to 9:05 to please Candace today, so we'll see. Always good to have you here. Yeah. There hasn't, and MC, back to your comment there haven't been a lot of the issue with real estate, obviously investors buying rentals, it doesn't right now, doesn't cash flow. Property values are still too high. Interest rates now are way too high. So it doesn't, and rents obviously rents are expensive, but rents don't cover. So a lot of people were buying, residential rental property to counting on the appreciation of the property as opposed to if it actually cash flowed. It's very hot. It's very tough. I mean, it depends on the market too, though, where you're buying, because in the lower, like BC, Ontario, I I don't work in Ontario, but I know from talking to my friend Rob, who's a mortgage broker in Ontario, the cost of like buying a house to get it to cash flow for a rental is just doesn't, your money would be better invested somewhere else. So yeah, it's tough. But so I haven't worked on any kind of rental investor stuff like that for a long time. Like I said, it's mostly private individuals for the most part. So Zach, sorry, skipping comments back and forth here. Zach, Christmas week was slow. It's been busy for me too. It's like everybody wants to get everything done before the new year, and that's kind of like the last kind of, like push for everybody because they want it off their desk. So like everybody's scrambling to make everybody else scramble. Just the way it is. And Kansas, maybe we will go to 9:06. We'll be about 9 o'clock. Yeah, so in Ontario, that's the thing. So I mean, with landlords, it's much the same in BC. I mean, I'm not privy by any means on all the BC, Residential Tenancy Act, but it can be very hard to get people out. It has to go through the courts and all that kind of stuff. If they decide to not pay their rent, and it can be hard. It can be really hard. Also, too, like if you get a bad tenant, like I would never want to be a landlord, because I've heard too many horror stories. Like you get a bad tenant, either they don't pay, or you evict them or something. They thrash the place is destroyed. It costs you a fortune. Or they move out and you have to find a new renter, which can be difficult as well to find a good one. And if it's empty for a month and if you're not cash flowing, it's like, where's this money coming from? I would not want the headache of that. On the flip side, with a mortgage, you have a lien on essentially it's a mortgage, it's a lien on the property. So if they don't pay, I mean, ideally you want them to pay. We don't knowingly put a lender in a mortgage that we think the person is not going to pay. That would be silly, because that's not how we represent the lenders. But if they don't pay, then there is a recourse, right? And it can be, I shouldn't say it's not necessarily swift. The foreclosure process in BC anyways, and I'm going to assume other provinces where you are, it's not the swiftest necessarily, but ultimately it results in the sale of a property if you're not paying. But again, then you have the whole other worry of them destroying the property, and you just don't want to go down that. You're protected, but it can be a process as well. You never want to go down that route, hopefully, with things. We've been fortunate, thankfully, that we haven't had those problems. And that's partly comes down to that comes down to it, MC, exactly, like based on studies. It is a small percentage of people who don't pay their mortgage. Obviously, depending on the type of private mortgage, it can be riskier, right? But we try not to place a mortgage on somebody's property that they're not able to pay, if that makes sense. There's a whole bunch of different reasons why people get private mortgages. They're not a bad thing necessarily for people. Sometimes it's a quick solution to something. And just for whatever reason, sometimes it makes more sense to do that if they, but I used to work for a rental company, and we got the honor of a time or two taking pictures of our renting after a messy tenant moved out. Yeah. I've seen some bad ones, and heard some horror stories as well. Yeah. You just don't. If you have a rental, you don't even want it to be vacant. Let alone, I mean, thrash is like, I mean, you obviously worry about it, but you don't want your tenant to leave and be vacant for a month, because obviously with prices and stuff, with mortgage, with people that took a rental with mortgage rates, if they took it on a variable mortgage and the rates gone up, your rent hasn't gone up that much. But Yeah. Yes, if I had to get a yeah, yeah, pretty, it can be ugly. I had a friend who had a rental, the same thing. They had a tenant for years, and the tenant was the best tenant, and they had must have been 3 or 5 years, long time, and had no issues, none, always paid. And then all of a sudden, one month, the rent check didn't come, didn't it bounced. Oh, that's weird. Tried to call, nothing. So eventually, you have to give the notice to access, and got into the suite, completely destroyed, and this person just disappeared. And they were in the unit for probably 3 to 5. I think it was closer to 5 years, over 3 years, and always paid the rent, but no rhyme or reason. And they ended up having to pay. Oh gosh, it was probably around 30,000 at the time, $30,000. Like, they had to do floors, they had to do appliance, like literally everything in the apartment. Yeah. Yeah, if you have good tenants in MC, um it's great. If you have That's the thing. Sometimes you get a great tenant and you don't raise the rent, right? Just keep it as it is, because they know they pay. They're good tenants. And you're better off, as opposed to trying to gouge. Well, not gouge people, but you can raise your rent a little bit every year. But sometimes it's better even not to, because it keeps them there. They can think, oh, I've got great rent, and they're good tenants, and it's worth more than trying to squeeze a little bit more out of the property, for sure. Yeah. So there we go. Yeah. Good news. All right. On that note, it is 9 o'clock. I'm not going to make it to 9:05 for Candace, because I do have emails coming through. As you see, and my phone beeps at 9. So this time to start work. This was good. Thanks, everybody. I could talk about lending mortgages forever, but the live stream's not meant to be. It might take my mind off that sometimes, but I do appreciate it. So thanks for tuning in, everybody. We will be back tomorrow at 8 o'clock for Friday before Christmas. So we'll have the Christmas fireplace going. And off that, this was a good one. So thanks for watching, and don't forget, before you're heading out, hit the like button. Always helps with the channel, and we'll catch you all tomorrow. Thanks, everybody.